Hi, I'm Jim Jubeck, and welcome to this week's Trend of the Week video. Seasonal trends in energy and time to buy on the dip. Okay, there's a predictable pattern in oil and natural gas prices. And we're at the point where it starts to go down every year. If you want to look at a chart, and we will, you can see this on the chart. This is for the United States Oil Fund, tracks oil prices. So you can see, if you go back to 2021, this is November, October, November. We fall off the cliff at the end of November, and then we start to go back up. And by March, we're at a high again. We're seeing this now. This is where we are in both oil, and let's look at the other chart. This is natural gas, which works much the same way. There's that seasonal drop in December, and then we start to go back up. Now, so this, to my mind, means this is a time when your oil stocks, holdings, and ETFs should be going down, and will be going down. You should not sell, because this is the time when you actually ought to be adding to these positions, because you're going to get the pop by around March, and you can time it. It happens every year. It's more complicated this year because, we've got this war in the Ukraine that is changing the dynamics of supply and demand. We've got a hostile OPEC, which has been cutting production. We've got uncertainty about energy supply in Europe. One of the things that's done this year, which I think will make this pattern in natural gas even more pronounced, is that the Europeans, looking at winter is coming, and you don't need Jon Snow to know this, have been laying in supply of natural gas, and they've got enough natural gas to get them through the winter. That means when they get to March, and they start looking at next year's inventories, they're going to start to rebuild inventories. So you're going to get even more of a pronounced bounce back when we start to see that buying in March or so. So I would look at, if you want just to buy the commodity, I would look at USO, which is US Oil Fund, and US Natural Gas Fund, that's UNG. Those are both two ETFs. And then you can look at individual producers. One of the things that's happening right now is that we're seeing record US oil shale production, even though we're not seeing a whole lot of capital expenditure. They're just uncapping wells and pumping them harder. So the U.S. Energy Information Agency administration has basically said, hey, in November, we're predicting record production from the Permian Basin of Texas and Oklahoma, as well as record production of natural gas this year. So if you want to buy individual stocks, I'd look at Pioneer Natural Resources, PXD, ConocoPhillips, COP, EQUINOR, which is always a really interesting oil and gas and renewables play in Europe, Norwegian oil company, North Sea, natural gas facilities for piping to Europe, and that's EQNR. I own all those in the portfolios and have no intention of selling them anytime soon. Thanks very much for watching. If you like this video, please give us a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we do our next video. We're doing about 3 a week, not always on the same day. And if you want more of my stuff, including the portfolios that hold these energy positions, you can go to my free site, that's jubeckpicks.com. If you go to my paid site, jubeckam.com, you get some more ETFs, you get some puts, you get some inverse ETFs that help you play and protect your portfolio during the bear market. Thanks very much for watching.